Jed Smith. Jed, nice to see you.
Thank you, Mark. Nice to be here.
Jed is the Managing Director of Quantitative Research for the National Association of Realtors. And we've just had a terrific presentation on market trends and data as it relates to the market in general, but more specifically because of the focus of this panel being resort and second home, what those numbers are for resort and second home. And I was just thinking maybe it might be helpful for the people who visit our website if you could maybe touch on a couple of what you think are maybe the key points of where you see the housing market right now in general and how it relates to resort and second home as well.
Sure. Well, in terms of the U.S. housing market in general, we're in recovery. Most economists think that we will not have a double dip, that we'll have a slow recovery, and we'll see that probably in the housing market. The data right now show that prices have stabilized, they're starting to turn around, go up a little bit in most areas. So overall, the general thinking is that it's going to be relatively flat, but we're not going to see any more of the decline. So that's good. Now, as far as how does this translate into the second home market, one of the things that people are asking about when they're coming into this country from abroad is this a safe market to buy in? They know the advantages, but are they going to lose money? Probably not right now. According to most of the projections, it looks like a market that's starting to turn. Obviously, Florida is a great market. And as far as the domestic people go, domestic buyers, again, we're overcoming the housing problems that we've had. So there is general consensus that probably the market's going to stabilize, get better in 2011, probably be relatively flat in 2010. And so we've been through a lot, but we are recovering.
So it sounds like the worst is over.
We sure hope so, and according to the experts who look at this, they say that the worst is over, and assuming that the economy continues to recover, the housing market.
I thought it was very interesting. Your numbers were all very interesting and compelling, but especially the numbers about the GDP, because it would appear that there's been a very strong recovery in the GDP over the last little part of the cycle.
There's been a bit of a recovery. We would like to see 5 or 6% GDP growth. We've been getting 1 to 2% GDP growth. People are saying this year will work out to be 2.5%. Putting this into perspective, we're talking about GDP going up in terms of $400 billion this year when we have a modest recovery. If we get a better recovery, the numbers will be higher. Right now, it's not going down.
Terrific. Well, listen, thank you so much for taking a moment with us and sharing that information. I'm sure everybody will find it very helpful.
Thanks.
Thanks, Jeff.